All right, guys, it's happening. The banks are finally starting to make moves, and this could be ahead of what the RBA is about to do when it comes to interest rates. If you're interested in knowing what the big banks are doing and what their moves are suggesting where interest rates will be in 12 months' time, then definitely keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, personal development, and all things financial freedom. You will see the book, which is Retire Filthy Rich with Real Estate. It is the #1 property and personal finance book in all of Australia. So you need to go ahead, you need to pre-order it. I'll leave a link in the description box below. If you're watching this after the book is out, you're probably seeing it at Dymocks, airports, and everywhere else you can find a book. So definitely go ahead, get your hands on it, go through it as quickly as possible, get the learnings in, and start executing with speed. Now, this is very, very critical news because we know that the RBA is supposed to meet in February. And there are big predictions around the fact that interest rates might cut for the first time in over 18 months. And that could be massive. But we already know this. I've made videos about this actually. I've talked about how interest rates might cut and what this might do. And I've done a deep dive on all of this, and you can check out this video here. But the reason I'm here is not to just repeat the same stuff. It's that banks are starting to make moves. And when they make certain moves, it usually tells us what's about to happen. And so let's look at some of these clues. You've got Macquarie Bank, which is the 5th largest bank in Australia, are adjusting their rates lower after it made a surprise move to raise its fixed home loan rates in October. So in October, they said, well, we think interest rates are going to be higher, so we jacked up fixed rates. And usually the fixed rates are a good indication of where they think rates will be. Because of course, if they think rates are going to cut over the next 12 months, having a fixed rate in 12 months' time to be much lower than that means they're just losing money. But if they go ahead and increase their fixed rates, they think that the interest rates will be much higher than where they are right now. So what they suggested in October was, yeah, rates will be higher in 12 months' time. Now what they've done is they've started reducing rates. And that's because they think, along with other banks like CBA and ANZ, that, hey, maybe we need to cut rates a lot faster than that. At the time, Macquarie instituted a 30 basis point rise across the board when the rest of the market was almost universally dropping fixed rates in anticipation of a forthcoming cut to the cash rate. Tuesday's cuts see Macquarie lower rates largely by 14 to 16 basis points, putting them back on a more competitive footing. So 14 basis points doesn't sound like a lot, but if you had $1 million worth of debt, that's about $1,400 a year that you are now saving. I know it doesn't sound like a lot, but every dollar counts. Macquarie back among market low rates. The new lowest fixed rate on offer is 5.55% for a basic owner-occupied fixed loan for borrowers with less than 70% as the LVR, which means you're putting a 30% deposit down. And what you can see across their basic fixed rates is a drop of anywhere between 0.14 and 0.16. Now what's really interesting is the investor rates are also cut. So Macquarie has also cut its rates across the board for fixed rate loans for investors making either P&I or interest-only repayments. The best new fixed rate for investors is 5.69% for borrowers with more than 70% LVR paying P&I and fixing for 2 years or 3 years. Again, the rates are the same for investors choosing an offset home loan option, although no offset benefits are available while the loan is in a fixed rate period. Now, this is a really interesting graph. What it shows is the share of new home loans that are on a fixed rate versus a variable rate. And for anyone that's watching, a basic 101 is that fixed rates is the rate that I get in today and I lock it in for 2 years, means that's the rate I'm going to pay on my mortgage. But if you get a variable rate, it means that you are taking on the volatility that if rates go up, your rate will go up. If the rates go down, you might get the cuts as well. And what we can see is in 2020, when rates were so low, a lot of people, in fact, 45% of all new home loans were actually fixed at the time. And the fixed rate was much lower than the variable at the time. And since then, we just see it continue to fall lower and lower. And currently, you're looking at about 2.5% of new loans originated are now being fixed. So that just tells you that the appetite in the market is that they don't want to fix their rates. And in a lot of cases, the fixed rate is actually higher than the variable. So people are like, there's no point doing this. Now, this slight adjustment to Macquarie Bank's fixed rates have come just weeks prior to the RBA sitting down and meeting to say, hey, maybe we're going to cut rates. Is this a move by Macquarie strategically to say, hey, we could lure in some customers that are unaware of what's happening in the market. They don't watch Ravi's channel on YouTube. So let's go and get them in. And they might just go, hey, that's a really good rate. Let me lock it in. Because they expect that the first rate will come in Feb, and they don't think it's the last one either. On one side, you have the home loan rates, which affects your mortgages. But on the other side, you have term deposits. Now, based on the cash rate, you'll see both of them move. Now, what we've seen is during the times of the pandemic and the lockdowns when interest rates were really low, the term deposit was absolutely nothing. It was less than 1% that you were getting at some of these banks. Now, in contrast, you're looking at rates closer to about 4%, but now that number's starting to drop. And essentially what this means is if someone was to go and get a term deposit, and let's say you put $10,000 in, they're saying over 12 months or over the period you've put it through, you're going to now earn 4% on that. But now what CBA has done is they've started to reduce their term deposit rates. And that means that they're predicting that, hey, we think the interest rates will cut, which means it's actually not in our best interest to give you a higher term deposit rate. So what you want to see is a high term deposit rate and you want to see low mortgage rates. What we're hopefully about to see is mortgage rates lower, but that unfortunately means term deposits will also fall. Now, the chief economist, Stephen Halmarick, I think I butchered his name, said the drop in spending combined with the improving inflation outlook supported CBA's position that the RBA will cut in February. The fall in household spending in December reinforces the view that the Australian consumer continues to struggle, with summertime and holiday spending clearly brought forward to October and November to take advantage of sales activities, he said. We continue to hold the view that the RBA can begin to lower rates at their first meeting of the year. We also expect 100 basis points of monetary policy easing through 2025. They believe that the rates will drop by 1%. And that means if you're on a mortgage of say 6.5%, now you could run your numbers at 5.5% and see what your potential cash flow looks like. On $1 million, that 100 basis points is a saving of $10,000 a year. That's about $200 every single week. Now that will definitely help a lot of people. But as we know, nothing is guaranteed. Now we've spoken about Macquarie Bank and we've spoken about CBA, really big banks in Australia. What we've now started to see is other lenders coming out and saying we're cutting rates. And that's exactly what's happening. What we've seen is 4 other lenders, including Australian Unity, which is cutting early. You've also got G&C Mutual cutting early, and you've got the Queensland Country Bank also cutting fixed rates by 20 basis points. This means that the appetite or the general sentiment there is that interest rates will be lower in the next couple of weeks, which means they're all predicting that maybe interest rates will be cutting soon. Now, if you go ahead to the RBA rate tracker, if you search it up on Google, you'll find this. And what you'll see is the market expectation of an interest rate cut. And what you can see here is it's hovering around 73 to 78% chance that the interest rates will cut. And that is a major change when only a couple of months ago, you were seeing this number closer to about 10 to 20%. And at some points you saw 20 to 30% likelihood of a rate increase during that period of time. The market has definitely shifted a lot. The chief economists at a lot of these banks are saying, no, it is guaranteed that we're seeing an interest rate cut. Nothing in life is guaranteed apart from the fact that if you subscribe to the channel, get us closer to 100,000 in this community of subscribers. It'll continue giving me fuel to make more videos for you guys so we can learn together and absolutely dominate so we can achieve financial freedom faster and together. So I hope you guys have enjoyed this video. If you want the book, I'll leave a link in the description box below. If you want to talk to me, my team, and get the strategy in place to actually go and execute, I'll also leave a link in the description box below. Or you can simply look up search property on Google and you'll find over 200 5-star reviews as well as the website so you can have a bit of a squiz and then book in a call as well. Hope you guys have enjoyed this one. Catch you guys in the next one. Thanks guys.